Today we're talking about the deductibility of gym memberships to small business owners. And we're also going to be talking about what happens if you put a gym on the business premise of kind of where your everyday offices and operations are. So before we talk about on-premise and athletic facilities, because that's going to come into play and that changes things a little bit, let's talk about gym memberships. This is a comment that often comes up with small business owners when they're saying, hey, I want to support providing these opportunities, a gym membership for my employees, maybe for my family, things like that. And generally, the general rule of thumb around gym memberships is that the IRS says that is a personal expense and you get no deduction for that. So no allowable business deduction for personal expense, which would be a gym membership. And the IRS code is pretty strict or pretty obvious about this. Now, there are some rare circumstances on where a gym membership might be acceptable. So let's imagine that maybe you are a fitness instructor and you operate your business out of gyms, like you're meeting with clients within a specific gym. There is a case where that could be deductible because in order to meet your client, you would need to have that gym membership so that you can get into the gym to go and train your clients. So there's some rare instances and some rare professions where a gym membership would be deductible, and it's mainly in the case where that sort of serves as like your office. It's your location on where you do business, but you're not doing it for personal purposes. So you're an instructor, you're not having that membership to work out on your own. You're simply having that membership so you can serve your client base. So general rule, gym memberships are not deductible. But now let's talk about gyms or other athletic facilities that are on site, on location of your business location. So maybe you own an electrician business, and on that electrician business, you have a gym in the back office, or maybe you have some tennis courts, or maybe pickleball courts, as we all know how popular that is right now. These are treated a little bit different. So think of gym or athletic facilities as on-site locations or places on the business premises. Those oftentimes may be deductible, but there's certain circumstances, certain rules that we need to follow as a business owner to ensure that we can get a deduction for putting together a gym inside our business or some other type of athletic facility. The first thing that we need to think about is that in order for it to qualify as a deduction, it needs to primarily serve the interests of employees, and that excludes officers, shareholders, owners of the business, or other highly compensated employees. So primarily serves the interest of your employees. What the IRS is basically saying is that they want this gym that you're going to get a deduction for, they want it to be servicing your employees, not just servicing all the highly compensated employees, all the owners of the business. They want to serve basically your employees and be a resource for them. So what does primarily mean? Primarily means just more than 50%. So 50% of this use, of this gym, of this athletic facility that you're putting in, 50% or more of that use must be on non-owners, non-highly compensated employees. And so the easy way to do this is just use dates of use tests. So how many days did an owner or a highly compensated employee use this gym or other athletic facility? And how many days did your regular kind of rank and file employees utilize it? So that's an easy thing. So primarily means that over 50% of the use of this gym or athletic facility that you're looking to get a tax deduction for is for the use of employees and just your traditional rank and file everyday employee. Now, what is the IRS? The IRS says, okay, you have to exclude highly compensated employees. What does that mean? Highly compensated employees would be anyone that was highly compensated in the previous calendar year. And so highly compensated, the IRS for 2024, what is considered a highly compensated employee? Someone with earnings of $155,000 or more. In 2023, that number was 150. So if you have employees working for your business that are earning $155,000 or more, they're considered a highly compensated employees, and we're going to remove them from their calculation. An owner of the business is anyone that owns 10% or more of the business. So anybody that has an ownership percentage of 10% or more. Now, here's the caveat. That also includes family members. So think of siblings, spouses, children, grandchildren, parents. If you are a parent or a sibling or a child of a 10% or more owner, you're considered as part of that 10% owner group. So those are the qualifications. In order to get a deduction for a gym that you put on site on your business premise or other type of athletic facility, but in order to get a deduction for a gym that you put on site, it has to be primarily more than 50% for the use of employees, and that excludes officers, shareholders, owners, or highly compensated employees. This episode is brought to you by Taxome. At Taxome, we understand that saving taxes can be complex and overwhelming for business owners. That's why we're here, to be that tax strategist in your back pocket, ensuring that you pay the least amount in taxes as legally possible. With Taxome, you receive a tax savings blueprint tailored to your business needs, unlimited access to our team of tax experts, and an annual one-on-one live consultation. You'll also have access to our comprehensive training with videos, downloads, templates, workbooks, guides, and so much more, along with our monthly live trainings to keep you informed and in control. Thousands of business owners across the country trust Taxome. It's time you did too. Visit us now and take that first step towards paying the least amount in taxes as legally possible. There has never been a better time to join Taxome. Do not forget about our 30-day money-back guarantee. We guarantee that we will present tax-saving strategies that will, at a minimum, cover the cost of your subscription fee or your money back. This is your risk-free invitation to explore the benefits of Taxome membership and how it can transform your approach to tax planning and savings. Go to taxelm.com. That is TAXELM.com. Now back to the show. So let's go through some examples. I think this will help drive home this concept and say, okay, what does this mean? So let's go through an example, 4 examples I want to talk about today. Let's say I'm the owner. Mike's the owner. I have Jason, who's a highly compensated employee of mine, and I have Rachel, who's a highly compensated employee of mine. And we use this gym that we put on our business premise. We used it 280 times throughout the year. And our other rank and file employees that are not owners, not highly compensated, used that gym 300 times. So me and the other 2 highly compensated employees used the gym 280 times throughout the year, and our rank and file employees used it 300 times throughout the year. Deductible. More than 50% was used by rank and file employees. That's a deductible expense. Now let's go through the same example, except now in this case, me as the owner and Jason and Rachel, highly compensated employees, used the gym 300 times during the year. And our other rank and file employees only used it 280 times. Not deductible, because the majority of the use of that gym was from the owners or highly compensated employees. So very clear, very easy calculation to do. Now let's go through another example, because I think this gets interesting. If you have a lot of employees, it's very easy to do, but I think you can get interesting in this. Even if you have 1 employee, this may qualify. So let's say I'm the owner and I have 1 other employee who's just a normal rank and file employee. And I use the gym 250 times during the year, and that employee used it 300 times during the year. Deductible business expense. So this is not just for those super large businesses and you have to have a lot of employees to offset it. It can work with just an owner and 1 employee, as long as they're not highly compensated and not an owner. It can work in that. But again, they would have to, that 1 employee or your rank and file employees have to use it more than the owner. Let's go through one final example. Let's just say I'm the owner and I'm using this gym. My kids, they work for me. They're using this gym. My sister works for me. She's using this gym. And that's all. We have no other employees outside of me, my children, my sister, but I'm the only owner. Because they're family members of mine as the owner, we have no other employees using it, not deductible. So relatively kind of straightforward on how to determine this. Now, a lot of people say, well, that's great, Mike, but how do you show that more than 50% of this gym or athletic facility was used by non-owners and non-highly compensated employees? Simple. Have a sign-in sheet. Have a sign-in sheet in order to enter that gym, whether it's a key card swipe or just a paper file that says, okay, date and time and name. Who was in that gym? When were they in there? What was the date? What was the time on it? Utilize that as your support to say, no, this gym or this athletic facility is used majority by normal rank and file employees. Essentially, when it comes down to it, rank and file employees, in order to get a business deduction for a gym that you put on the premises of your business, essentially what you need is rank and file employees must use that gym more than 50% than owners and their families and other highly compensated employees. So hopefully that helped make sense. And I just want to kind of rerun what we talked about, because I know this is kind of confusing information and numbers and jargon, but let's go back to the beginning. Gym memberships. Can you deduct a gym membership? The IRS says no. That is considered a personal expense. That's a personal expense, not a business expense, not deductible. Now, there are rare circumstances. Again, I talked about, let's say you're a fitness instructor, and in order to meet with your clients, you need that gym membership, because otherwise your client's in the gym and you're standing outside trying to tell them what to do. That obviously doesn't work. So if you're a fitness instructor or something in that role where you need that membership in order to get access to it, then that would be deductible. Again, if there's personal use, we want to kind of weigh that and look at that and only take the business use percentage of that. But generally stating, gym memberships, not a deductible business expense. But a gym or athletic facility on the business premise, that opens the door for some possibility. That may be deductible, but there needs to be some rules. And think of this again as this could be you have a auto body shop and you have a gym in the back of it. You have an auto body shop and you have a athletic field in the backyard where it's soccer, it's a gym, it's all these different things. Gym or other athletic facilities on site at your business premises may be deductible, but the IRS says it has to primarily serve the interest of employees, rank and file employees. So that excludes officers, shareholders, owners of the company, highly compensated employees. So when they say primarily, what do they mean? They just mean that more than 50% of the use has to be for those rank and file employees. And we can use the day's use for this test when we determine that 50%. The IRS looks at a highly compensated employee, at least in 2024, as someone that earns more than $155,000 per year. And they look as an owner as someone that owns 10% or more of a business, and that includes their family members. This includes siblings. So if I'm the owner and I have a sister, they are considered an owner. In this way that the IRS looks at it, they would be considered in that 10% owner because they're related to me. So think of siblings, spouse, children, grandchildren, parents, all of those, even if they're employees, normal rank and file employees, they're considered owners of the business because they're connected to that main 10% or more owner. So again, what do you need in order to be able to deduct this gym or other athletic facility? It needs to essentially primarily serve your rank and file employees. Your rank and file employees have to use it more than half than any other employee that may be considered highly compensated, $155,000 per year, or an owner, someone related to that owner of 10% or more. So I gave it kind of an example. You have an owner and highly compensated employees that use the gym 280 times, and rank and file employees use it 300 times. That's deductible, more than 50%. In that same case, if you flip that and said the owner and rank and highly compensated employees use the gym 300 times, and rank and file employees only use the gym 280 times combined, not deductible. If I'm the owner and I use the gym 250 times and I only have one employee and they're just a normal rank and file employee and they use it more than me, it's deductible. If I'm the owner and I have no employees, but I have a bunch of family members working for me and that's the only employees that I have, not deductible because they're part of me as the owner. To help support this, we just recommend having a simple sign-in sheet. What was the date of the sign-in? Time may be put on there and just employee's name. And then you can track what the use of that gym or other athletic facility is. Again, when it comes down to it, rank and file employees must use it more than 50% than owners and their families or other highly compensated employees. So hopefully that was helpful. This one comes up a lot when I talk to people about the gym membership. Is it deductible? Is it not? How does that work? But what also comes up a lot is there's a lot of people on TikTok that say, yeah, put a basketball court at your house, put a golf course in at your house, put a gym in at your house. It's a business deduction because you own a business. Well, not so fast. There's some details there that they're likely missing out on that can help. Yes. Could we put a gym in at our business and get a deduction for it? Yes, potentially. But there's some things that we need to make sure we're doing correctly. We can't just say, oh, I own a business, so I'm going to put a pool in. I'm going to put a gym in. I'm going to put a golf course in. I'm going to put basketball courts and pickleball courts. And those are automatically going to be deductible just because I own a business and I'm the only employee. Not so fast. Again, the IRS requires that rank and file employees must use it more than 50% than other owners and their families and other highly compensated employees. So hopefully that was helpful. Again, this is kind of a series that we've been doing just on maximizing deductions, what options are available to you. This is a great option to maximize deductions. We just want to make sure we're doing it right. We want to make sure we're dotting our I's and crossing our T's. So just a reminder, if you haven't downloaded our ultimate list of business deductions, go and check that out. It's what we've been talking about the past couple of weeks. Really good information there. I recommend everyone reads through it once a year, maybe twice a year, maybe every quarter, just to get refreshed on ideas and thoughts and things that they can be thinking of How can we maximize our deductions in the business without just going out and buying things that we don't need? How can we maximize our deductions in our business and pay the least amount in taxes as legally possible? You can find that download at taxsavingspodcast.com/deductions. I want to thank you for listening to another episode. And remember, my goal and our goal here is to ensure that you pay the least amount in taxes as legally possible. If you enjoy what we're doing here on the podcast, I just ask, please rate us, leave a review wherever you listen to us, Apple, iTunes, wherever it might be. Please leave a review and rate us as it helps us reach more business owners like you. And I will see you next week.
This has been another episode of the Small Business Tax Savings Podcast. If you enjoy our weekly episodes, please leave a review and share with other business owners. You can find previous episodes and more information at www.taxsavingspodcast.com. Thanks for listening and have a great day.